The outcome of this week was the exact reason why I posted last week's video saying, hey, it's not the best idea to try and attempt to catch a falling knife. This week was not ideal, especially after NVIDIA's earnings on Thursdays. Thursday's action was pretty brutal. We opened up like 1.5% and then up, and then we closed down about 1.5%. So that doesn't happen very often. You can see that we did undercut the October 10th lows. However, we did reclaim them. This is not a screaming hey. The market is crashing. There is volatility entering for sure. Thursday's move, you can argue it was crash-like moves. However, I would like to put your nerves at ease with some stats, okay? The last time the market had a gap up of over 1% and then closed down below 1% occurred in notable years of 2008, which is around the financial crisis, and also the 2015 sell-off, as well as the 2021. 2021 was followed by a rally, right? That was COVID. However, these types of sell-offs, they don't always result in nightmarish crashes. As a matter of fact, the odds of the market being higher in 1 to 4 days after moves like that is typically around 50%. However, there is downside bias. Now, if you go out about a month, there's a 60% chance of the market being higher 1 month after this, right? So again, long term, these are typically okay. But what this typically shows is a lot of volatile chopping around, volatile price action that can be hard to play. Now, if you're looking at long term, this is a gift, right? We like dips for long term. The market has a natural buy, has a natural bid under it to propel it forward. So long term, this is great. I'm talking about short term here, right? So this is not necessarily end all be all. There's about a 60% chance the market will be higher in 1 month. Also, if we go look at the monthly chart, it's the same for NASDAQ as well. We have 1, 2, 3, 4, 5, 6 months in a row of basically just going straight up, right? Historically, with 6 months of gains, there is typically 1 to 2 months following of correction or digestion. So that is perfectly normal. Also, from the highs to lows, from here to here, we made about 43%-ish move, give or take a few percentages, because that's probably not super accurate. But either way, a huge move from the April lows, right? Giving back 10% of that is normal. There's nothing wrong with that. And as a matter of fact, it's kind of healthy. 10% pullbacks are a healthy thing. This isn't necessarily a crash yet, even though the volatility and the strength and the speed of the move may have felt like it historically. There is nothing really to be super concerned of just yet. Also, markets rarely top in October. There's some weakness that goes through November. It typically ends in the middle of November, actually in the 20s. And so the 20th of November, etc., historically. And so we have that to look forward to as well, especially if seasonality comes in and we have a natural buy of, going into the Santa Claus rally near end of December, etc. Markups into the end of year, whatever you want to talk about, right? We have the seasonality to say, hey, historically, October is not the top of the year. Historically, it's typically higher after October, okay? So with that being said, this is nothing to be super concerned about yet. However, the correction can continue. I'm not saying it's over. It can go deeper. We're only, if you want to look at the SPY here, I'll go back to the daily chart. Like, this bar is nasty. Bar is straight up nasty. We are at this prior support, 6,550 about. On the daily, we moved about 1% up. We're down about 2%. and now on the week, and then we closed about 3.5% on the month so far. The month is not closed, obviously. If we look at the equally weighted, here's something interesting, right? Look at this, super high volume. I'm pretty sure this is the highest volume ever, right? And it doesn't even come close. What does that mean? I'm not sure. I would educate a guess. It's probably the high beta tech stocks, money moving out of that and into the other names of the other 500 names of the market. Okay, that's educated guess. It's also near the 200 EMA, and that flattening also, and then about 5% pullback from the highs. Okay, percentage basis. Let's move on to the NASDAQ. Again, ugly bar. We don't really have, it undercut these lows. It kind of tagged this prior breakout, so you can treat this as a breakout and retest. It is spending time underneath the 50. This bar is just nasty. I would anticipate chop sideways action at least for a few days, probably to couple of weeks potentially. If not more downside action. Obviously, I could be completely wrong and we could bounce, but especially after what I just said with October not typically being the high, not 100% sure. Not 100% sure. If we go look at the equally weighted, we do not have a highest volume ever node here. This it got a little past 50% of this bar. It is at the 200 EMA. I did say, hey, this kind of looks like a head and shoulders pattern. It broke the neckline. You can see it's retesting. It did find prior support or support in a prior support area, which is basically kind of that breakout area. If you want me to draw this for you real quick. So this is an area of interest, I'd say 134. If it breaks that, we might be looking at 131, potential gap fill down here if it gets even weaker. That would not be ideal. Let's move on. There's a Dow spending time underneath the 50. Russell, a pretty strong bullish bar here. That may be of interest, but otherwise, if you scroll through, none of these sectors look super interesting. Google has been staying strong. Meta's been getting hit. Netflix has been getting hit. So that's why XLC is struggling a little bit. Energy looks interesting overall, just not right there. But if you go look at the names, it looks interesting. Financials, it's at the 200 EMA. XLI, prior support. XLK, always pay attention to tech, right? Especially with volatility. Remember, volatility is our friend as traders. I did not mean to move that. Either way, we don't have a gap fill quite yet in XLK. This is an ugly bar. I wouldn't be shocked if we at least tag the 200 EMA here down, maybe 16%. We may have a few percentage points to go. XLP, nothing interesting here. XLRE, nothing interesting here. XLU, I did say this has a potential to be a higher low versus here. That ended up not being true. This could be a double bottom if it undercut and then reclaimed. We'll see what actually happens. But utilities here, those are the top three names the last time I checked in utilities. Otherwise, XLV healthcare, again, continues to look good. You can see that we got a nice time correction, kind of a bull flag to the short-term 8 EMA, and then it popped even on volume. So I would take a look at these names, especially the names in XLV if you follow volatility. XLY, it's at the 200 EMA. I have nothing else more to say. Bitcoin, I did say, hey, it's at this prior support. If it breaks, it can even go lower. I had a target of 85. We are now past that. If we continue on to sell, look at this bottoming tail. Pretty high volume there. If you wanted to, you could always hook an anchored VWAP there to see if it holds, to give you an idea of the average position of the average market participant, whether they're underwater or above water from that. Otherwise, if this continues on, I can see it breaking 74. I was reading Michael Saylor. He has an average position of 75,000. If you want to talk about some stats here, the last time I'd say I was reading most recent buyers, 99% of them are underwater already, especially with if you've bought recently here. So that's not ideal. A lot of people are getting liquidated. So it's not the best. Um, Now, I would anticipate some sort of bounce here. You'll probably say, oh, Bitcoin's rallying 10, 15%. Don't be shocked if that, I mean, 10, 15%, that might be a little much, but also it might not be. Don't be shocked if we get a little rally and then everybody cheers. I think that rally would be shortable. It probably needs some time to digest and then start to turn up if it does so. When that happens, I have no idea. So that's the overall market there. Let's look into the specific names. Um, let's go to the heavyweights. We'll go Microsoft. Microsoft looks terrible, spending time underneath the 200 EMA now. This is an area of interest simply because it's by the 200 EMA. However, if this continues to get hit, 425 has a potential. We have this huge gap basically all the way down to 396. I have no idea if that's going to get filled. However, it's not impossible. This could be a double top. It broke this. What I would look for is a retest of this 490 area. And if that fails to get back into this range, it's probably going to start a new downtrend and start new lows. So that is a possibility, in my opinion. NVIDIA, here's that nasty bar on Thursday. It got bought up a little bit. It's staying mostly in this range. It's spending time. Maybe it just chops around and lets the 200 EMA catch up. Overall, though, it does not look good. It's not going to look good until it does. And right now, it just simply doesn't. Apple, this is one name that is helping hold the market up more than what it already is. If this turns over, then the market's most likely going to continue to turn over because the rest of these names, they don't look the best. And you'll see what I mean by that shortly. We do have a little volume pump here. Apple, if you are interested in the long, if the market wants to bounce next week, I would say Apple. I've been saying that for the last 3 or 4 weeks now. It just hasn't done anything, but it's time correcting. It's chopping up here. So it could go for a breakout. Amazon doesn't look good. We had a gap fill. It's gotten crushed. We're down 10% on the month. We are near a prior support area, also the 200 EMA. So it's an area of interest for potential buying. Ideally, it holds here, but overall, it's not really doing much. AVGO, Broadcom, that is, also by a prior support area. We have a gap fill to 308.78. That could potentially happen on further market weakness. Meta has been getting absolutely crushed. This has been a nice short against the 8 EMA. Every time it tags it, it gets hit down a little bit. If it wants to continue down, I do not think this gap fill to 549 and 10 cents is unrealistic. I think that is a possibility. Maybe it time corrects here and continues to sell off. However, also I think there is a long-term investing opportunity coming up for Meta. When? Not sure. Just needs to chop around, find a bid, and then maybe you can start building position. Not sure when that will happen though. Netflix doesn't look good. Chopped around, came back, retested the supply area, got rejected, and now made a new low. This looks like a good short. This could potentially continue to head down to the $100 level. I'm pretty sure I said that last week if it broke these lows. It looks like that is going to happen. It just doesn't look good. So I'll be looking for shorts here next week. Tesla did not look good. I said, hey, this could be a potential bear trap if it accepts back into here. Guess what? All it did was get rejected. I would say this is most likely going to head down to 360 and retest these highs. That is also around the 200 EMA, which is flattening, which is a good thing for longer term investors because it shows price stability, overall gains over time. But short term, mod term, obviously you don't like holding when you're down 10 per 15% on the month so far. That's not fun, but that's what you get for holding high beta tech stocks. So just kind of expect it. Google, another name that is helping hold up the market, just like Apple. If this starts to turn over, the market's probably going to head down even deeper, especially with how bad all these other names look. I've been saying, hey, it could be a decent short against these highs, even though that goes against my typical trading style of shorting against the inclining EMAs. I'm just saying that because it could be a good risk reward if the market wants to continue to roll over. However, at the same time, it might not be because the market has been getting hit and this has been staying strong. So this is definitely staying on my long list with market strength. CrowdStrike, it was on my long list and then it lost that relative strength. It is now back in this prior support zone. It might just chop around here. Nothing super interesting. Let's talk about ServiceNow. I have been saying I do think that this is going to fill the gap. It might happen next week. 76.63 completes the gap fill. I still think it's a thing. Most likely going to happen. PLTR, Palantir has been getting smoked. I did say 140s is not out of the question. It did tag 147 and some change at its lows today. And basically, I was just saying that because of this chop zone, right? This is a demand zone. Ideally, it does not break this. Ideally, it didn't get here in the first place, but here we are. So, level of interest, line in the sand, I think that is this low right here. 142.34. It's also near the inclining to flattening 200 EMA. So we'll see what actually happens there. Oh, my laptop's about to die. Robinhood getting smoked. 200 EMA is coming up. It's 30% away from all-time highs. It's gotten hit down 26% over the month. This could be a good confluence buy. I'm looking for an undercut of like the psychological level of 100. I'm looking for more 95 or so. Tags the 200 EMA, tags this prior area, and ideally it bases here and then starts to turn up. So that's what I'm looking at this week. Overall, if the market wants to continue down, I will be looking for a Microsoft short, for sure a Netflix short. That would be a good look. A ServiceNow short is also in a potential. Overall, if the market wants to bounce, longs, I would be on top of the list is Apple and Google. Otherwise, I'm not super interested in any other longs. This could be just a long time chop. This could continue to be a challenging market to trade. Either way, your number one goal is to manage your risk. Make sure you are where you need to be when you need to be there, and continue to grow and develop as a trader. Hopefully these videos are helpful for you. If you find them valuable, like, subscribe, comment below, share your thoughts on how you see things. I would also read about NVIDIA, by the way. I forgot to touch on this. That's a whole separate topic of why earnings, why they got hit. There's bearish opinions about fraud, and kind of a cycle of like feeding its own revenues by supporting other AI companies that use their products. So go read about it. But that's another reason why NVIDIA may have gotten hit. Sorry to end off like that, but either way, I think you should have bearish opinions and a potential reason of why this happened. I know A&Rs were an issue, and then also account receivables, and then also their like storage of chips are increasing, which is kind of the opposite of quote unquote insatiable demand. So there's a lot of questions about NVIDIA at the moment, which is partially why it got hit, and why the market got hit overall. All right, anyways, I'll stop jabbering here. Enjoy your weekend, and we'll catch you next week. Trade well.